Hello, I'm Rachel Carroll, President and Managing Partner of Edison, Inc. And I'm delighted to be joined today by Bea Ordonez, who's the Chief Financial Officer of the OTC Markets Group. Bea, welcome.
Thank you.
Bea, to just begin with, for those who aren't familiar with the OTC Markets Group, perhaps you could just give us an overview, an introduction to the company, the different service areas, and the different clients within those service areas.
Sure, of course. So really, in the simplest of terms, what we do is we operate a trading market. And often when we're dealing with folks who haven't really heard of us or aren't familiar with our model, the best parallel we can draw to really sort of have it click for them is to draw parallels with the exchange operators, folks like NASDAQ and so on. So much like those sort of businesses, we operate three distinct business lines. The first one, and really the core of our business, is the trading business. And so we operate two SEC-registered alternative trading systems. And what those platforms do, quite simply, is to connect a community of broker-dealers and allow them to seamlessly trade and transact with each other across that range of roughly 10,000 OTC equities. And now over the years, what we've done is develop market segmentations or market tiers to really organize those securities based on a few things, based on financial standards, based on standards of corporate governance, and based on the timeliness and sufficiency of the disclosure that those companies provide to investors. So that's our trading business in a nutshell. Our corporate services business, which is very much akin to a listings business, what we're really doing through that is offering a suite of services and products that allow that range of 10,000 issuers to really access all of the benefits of being a public market, but at a fraction of the cost and really at a fraction of the regulatory burden as well. And then finally, we have a market data business. So we distribute market data very, very widely and very broadly. And through a suite of enterprise and other license types, we make financial data available, price data, company data information, again, across that range of 10,000 or so securities. So through those three business lines, we really touch a very diverse sector of the financial industry.
And you reported Q3 earnings on November 5th after the market close. What were some of the highlights from the earnings statement?
Sure, of course. So yes, we reported this week. And look, to give some further context, our revenue model is a subscription-based revenue model. And roughly close to 90% of our revenue is subscription in nature and therefore recurring. And that's got, a few advantages, but one of them obviously is that, we have relatively predictable revenues, relatively predictable cash flows. So what we saw in Q3 was really a continuation of some of the same trends that we reported in the first two quarters of 2019. From a top-line revenue perspective, we delivered 7% quarter-over-quarter growth, and that was the 11th consecutive quarter where we drove growth on a top-line basis. And all three of our business lines delivered growth, which obviously is great. Some of the highlights, some of the primary drivers of that growth, our corporate services business has been a really good driver of growth for some years now. And certainly in Q3 and in 2019, generally, one of the big drivers has been growth in that top tier of companies, our OTCQX best market. We've seen growth in the number of companies on that market. Strong sales have contributed. An uptick in our annual renewal has contributed. And it's the reason we love seeing that is it's very sticky revenue. So we have, as an example for 2019 on that product, a renewal rate of 94%, which is really great. On our trading business, we also saw nice growth. Our OTC Link ECN, which is an electronic communication network, delivered 49% quarter-over-quarter growth. Now, it's a small component of that overall revenue pie, but it was a product we launched organically in late 2017, and we've really seen very good traction. We have more than 50 broker-dealers connected, and we're driving more and more volume on that platform, more and more trading, and as a result, more and more revenue. And then finally, on the market data side of the business, all of the growth that we generated on that business line has really come from organic sales. There's no sort of price increases embedded there. And it's sales of some of our premium products. Our suite of compliance analytic products have been very successful. We've seen strong sales now. And we have more than 40 users here in the US that are using those products to really streamline and automate their compliance processes for the OTC space. And they've become very integral to those processes and are really used by pretty much every bulge bracket firm, every major clearing firm, every major bank that is active in our space. So looking at expenses, we can touch very briefly on that as well. For the quarter, we saw our expense base rise by roughly 17%. And the big driver of that has been an increase in our compensation costs, which went up 15%. In common with most financial technology companies, compensation is really sort of the predominant factor of that expense base, roughly 65% for us of that. And we made some very significant hires sort of over the course of the year, particularly in the early part of the year. We really made investments in people there. So we added hires in London to drive sales internationally. We added hires here in New York to help with some of the sales on the trading side of the business. We added a couple of folks pursuant to 2 small acquisitions we made earlier in the year. And we also added to our infrastructure and development teams. And those are all hires that are really designed to drive sort of long-term sustainable revenue growth that is going to take us sort of through this year and into next.
Great. So thinking about the longer term business growth, maybe you can talk a little bit about other developments within the OTC Markets Group and progress you've made towards longer term goals.
Sure, of course. I mean, look, our mission really is to continue to develop markets that are more efficient and that serve the needs of investors, serve the needs of companies, serve the needs of broker-dealers and other market participants. And really one of the guiding sort of principles that we adhere to in thinking about that is that data transparency, that more transparency in the market makes the market more efficient. Issuers can more meaningfully engage with investors if they put out better disclosure and more disclosure. Investors can efficiently price risk if they have good information. And market participants can address and mitigate their own risk, whatever their view on that risk is. So a lot of what we've done, certainly over the last several years, but even sort of beyond that, and what we will continue to do is focus on initiatives that really do drive more data-driven transparency in the market. So just in the last sort of 3 quarters, some of those include our policy on stock promotion, a problem which is not just a problem for OTC stocks, but is in fact very prevalent, or just as prevalent, if not more so, on NASDAQ and on some of the exchanges. Our shell risk and promotion flags, which are data points that we put out into the market to alert investors and others to potential risks. Our small cap compliance file, our Canary UI, which is a user interface that folks use to be able to get a real-time view of compliance analytics points and so on. Our transfer agent verified shares program. So I'm listing a lot of things there, but really they're all driving towards the same thing, which is to put more data out into the market for folks to be able to do what markets are supposed to do best, to price risk. Another sort of significant area of focus for us is to really continue to enhance our offering for issuers, to really continue to deliver in an efficient way, in a cost-effective way, all of the benefits of being public to that range of issuers that I talked about earlier. And that can come sort of through a number of initiatives. One of them certainly is looking to get more regulatory recognition for our markets. And that's important for a number of reasons. When we can get more regulatory recognition, issuers find that the secondary trading of their stock is smoother, more efficient. They find that the pool of available investors is deeper, and so on. There are obvious advantages. We look at that from a few angles. We've worked recently on a significant initiative to gain national state blue sky recognition for our markets, and we've made tremendous progress in that. Our OTCQX best market is exempt from blue sky laws in 36 states, and our QB market is exempt in 33 states. Other areas of focus right now is that we're actively working with lawmakers, with legislators, to find sort of legislative solutions to some of the challenges that our companies face. To, for example, provide qualified companies on our OTCQX and OTCQB markets with margin eligibility when that's appropriate, with a more effective solution to offer ESOPs or employee stock ownership plans. We also see tremendous opportunities from changes in the regulatory landscape. So, there's been a flurry of activity from the SEC in our space. Quite notably, recently, the SEC published a concept release and a proposal for rule changes to Exchange Rule 211, which is the rule that governs the publication of quotations on interdealer quotation systems like OTC Link ATS. And that rule, it's a very long concept release. It runs to more than 200 pages. But one of the principal things it does is to say, were it to be enacted, that companies would need to make available, publicly available, current information before quotes could be publicly available on systems like OTC Link ATS. And what that release did was explicitly recognize our market designations and explicitly recognize what current information might mean for purposes of that rule. And that gives us a tremendous opportunity in our discussions with them, in how we formulate our comment, and how the rule gets formulated when it's eventually published and so on. To frame the market further, to make sure that we're part of that debate, to ensure that we continue to offer efficient secondary trading in securities, and to balance the needs both of companies and issuers and the needs of investor protection, all of which are very important and part of that overall ecosphere. And in addition to that, in looking at sort of the services and products we offer, again, we're always trying to enrich the overall platform, enrich the overall offering. So another example might be our purchase of the virtual investor conferences business early in the year, which again is a platform that provides issuers with a cost-effective way of engaging with investors online. And then just finally, we just recently in October announced a strategic alliance with North Capital Technology. And through that alliance, we're providing companies on our markets with access to technology that will allow them to cost-effectively raise capital online. And that's a key area, I think, as we see private markets develop, as we see more and more companies going to the private markets to raise capital, providing small and venture stage companies with a technology offering that allows them to access those markets effectively is something that I think can be really solving a problem for those small cap issuers. And it's not only private offerings that are available on this platform, it's also that whole family of Jobs Act offerings like Regulation A and so on. And what the platform does is provide issuers with a technology that can seamlessly integrate to their own website, which we've integrated with our website in order to be able to drive traffic for potential investors who might be interested in those kind of offerings, and really allow an issuer to manage that whole process from front to back entirely online and in a cost-effective way.
Great. Bea Ordonez, thank you very much.
Thank you.
And if you'd like to learn more about the OTC Markets Group, please visit the Edison website where you can access all of our research. Thank you.